with this, I'm sure you will not be blowing your accounts every now and then. If you have a good risk management, just use this. Now, this is simple. This is market structure. For example, the market is going up. This is uptrend. It pulls back. It's going up. It pulls back. It goes up. Hey, English is Englishing. Forgive me, I'm not an Englishman. Now, what do I mean? Now, for example, for those who are new, who will not understand this, and you are willing to learn Forex, DM me. Number on bio, and we shall talk on process of registering in my ongoing classes. Now, this is mostly what we learn, because this is a strategy that I found is almost 70% profitable. Now, anytime this is an uptrend, anytime it is an uptrend, you will come to understand you will have always, for example, if this was the low and this was the highest point, you will find that this will be the strong zone that the market is expected not to break. And if this is the highest point, this is the point where this is the weak point where we expect the market to break. I am using the layman language. If you have your terms, use them. But this is just simple context, the knowledge behind everything. You can label whatever, call it what you want to call it. But I'm just using layman language for each and every one of you to understand. Now we understand this is the only side that we expect the market to break. Now what do? Now, for example, the market is around here. So the market has broken this side. Now this is where you'll find most people calling it. This is where you'll find people calling this zone here break of structure. This is where you'll hear people calling this zone break of structure. Okay. Sorry, I'm holding my phone and trying to use the mouse at the same time, so forgive me. And I'm doing this while laying on my seat. Is it laying on my seat or lying? Whichever. Now this is a break of structure. So always, once you know the market has broken, you look at the lowest point. For example, this is the lowest point. Now this becomes your strong zone. Okay, this becomes now your strong zone. And now what do? You create a range. Hey, forgive me, the video might be long, but it will be worth it. Okay, and now you take your, for example, this is where the market is, up to that zone. This simple market structure, we expect now, according to our market structure and according to this is an uptrend, this is the zone that we expect the market not to break. And this is the zone that we expect the market to break. For example, if there is a pullback, you will wait for a pullback to happen. The market will always, as the market moves, it will always breathe. So as the market breathes, the market will pull back. Once it pulls back, for example, at that zone, you wait. This is where you are expected to enter. Now, let me leave this one here so that I can show you something. How do you know now the market where it will pull back to? Most of the time, at this range from up here to down here, you can draw a range. And at the middle of that range, the upper side, for example, this is the range. This is the, for example, from up there up to here, middle is around here. Whatever tool you use, I don't want to complicate using a lot of things, so you know what you can use. Because this video is not for beginner. I've said for any beginner, DM me. You'll find my number on the bio. Now, the moment the market at this zone, the market is at a premium price. It is very expensive here to buy. So what do? You wait for the market to pass the 50% mark. The 50% mark of the range. The range I've said is between this higher low and this higher high. So what do? You wait for the market to reach at a discount zone. And most of the time, personally, for those who know how to use Fibonacci, the best price point to look for is around 61 and 78. Sorry, for those who are using Fib, I like this tool because this tool makes good money. Those who know how to use it, because it deals with the psychology of men. Now, most of the time, the market will come at this zone. You can see even my 78 is very special. I've colored it differently. So this is what I do around that zone. So it doesn't matter the time frame, but if you want good accuracy, if you are a day trader, just use 15 minutes, 30 minutes, like that. So around this 61-78%, look for a fair value gap or an order block, or below here 78. The market will always respect that zone most of the time because it is an uptrend. So if it comes around that zone, it will come around that zone, tap the zone, and then what do we expect? We expect the market to break our higher high. You understand? So what do? That is where you look for a long position. You come, put your long position there. And for those who have good capital, you can put your stop loss. You can put your stop loss below the line where we expect the market not to break, just there. And you target what? You target the higher high, because that is the zone where we expect the market to break. Are we together? Simple like that. Are we together? Then, if you still want to lower your risk, you can put it up to there. But this is risking more because the market might come to around 78. Still, depending on which currency you are using. Now, the next thing, for example, let's go to the chart and see. Now, this is the chart. This is a monthly. This is monthly. Which pair? This is gold, okay? Gold. Monthly chart. This is, not gold, sorry. This is Euro USD. I'm used to trading gold, so this is Euro USD. The market is downtrend. So, this is the highest point of the market structure. This is the higher high. Sorry, the higher low, because break of structure happened around here. Is there a break of structure happened? Is there a break of structure happened? So what do? You wait for the market to pull back. And where did the market pull back to? You can see, let me see if you can see well. Yes, 78. Tapped the zone. What is happening? The market start, and this is monthly, guys. This is monthly. So with a good entry model, up to now you'd still be holding. And where do we expect the market to take profit? Up to that. Now, how you can imagine, this is why you see people holding long trades and you wonder how they get them. This is how. And again, if you want to learn this more, contact me on my DM and we talk. And this, remember, poverty is the enemy.